injured. Hasina, who initially fled to Delhi, has now left for London. An interim government has taken over, led by the army chief, and Hasina's arch-rival Zia has been released from the prison. The Bangladesh army has said that the country-wide curfew has ended and schools and businesses will reopen. The United States and the United Nations are closely monitoring the situation and have urged the interim government formation process to be democratic and inclusive. We caught up with the former ambassador KP Fabian to talk more about this. Listen into what they had to say.
Well, let's first try to understand what has happened. I have here a list of 18 names which, these people are likely to take over as interim government. And the first name I have is Dr. Salahuddin Ahmed, former governor, Bangladesh Bank. Okay? Then I've got a former foreign secretary, Tawhid Hassan, and lots of other people. So it appears that a competent government of experts, a technocratic government is likely to take over, which is a good development. Now, as regards relations with India, well, to an extent, India had put all its eggs in one single basket. That is, focused too much on Sheikh Hasina. But I don't think that is going to seriously impact on India-Bangladesh relations, because both countries have good, solid reasons to retain their relationship in a state of good repair for many, many reasons. I don't want to go into that. So I don't think we need to be worried about adverse impact on relations with India. But you please keep in mind what I said earlier, that we appear to have put all our eggs into one basket, but that doesn't matter anymore.
All right, that's the word coming in from the former ambassador KP Fabian, but also here is a special report which highlights the fall of the Awami League head and Prime Minister of Bangladesh, Sheikh Hasina. Take a look.
The house of Hasina has fallen again. Almost half a century after its founding father was deposed in a coup and assassinated by his own army. Today, his daughter and the woman who led Bangladesh for the last 15 years is forced to flee her motherland. Her palace taken over by her own people. For now, its future tense in Dhaka.
সেখানে আমরা সিদ্ধান্ত নিয়েছি যে একটা ইন্টারিম গভর্নমেন্ট আমরা ফর্ম করব এবং ইন্টারিম গভর্নমেন্টের মাধ্যমে এই দেশের সমস্ত কার্যকলাপ চলবে। আপনারা সেনাবাহিনীর প্রতি আস্থা রাখেন, সশস্ত্র বাহিনীর প্রতি আস্থা রাখেন। আমি সমস্ত দায়িত্ব নিচ্ছি। আপনাদের জানমাল এবং আপনাদেরকে আমি কথা দিচ্ছি যে আপনারা আশাহত হবেন না।
Sheikh Hasina's hasty departure marks the tipping point of what began as a student protest against a contentious move to reserve up to 30% of government jobs for families of veterans of the 1971 Liberation War. The protest, which began late last month, escalated dramatically when students at Dhaka University clashed violently with the police, leading to at least 300 dead officially. India has always had concerns of Bangladesh becoming a puppet in the South Asian region, and there are many who could possibly benefit from Hasina's fall from power. The obvious suspect is China, already seething after Dhaka had rebuffed Beijing and decided to partner New Delhi in the $1 billion Teesta River Development Project. Earlier this year, China was believed to have played a key role in the India Out protests that took place in the run-up to the elections. Even China's geopolitical rival, the United States, has a vested interest. Since 2022, external actors, predominantly Western countries, have been intervening in Bangladesh's election process, expressing concern over human rights abuses. And then there is old rival Pakistan, with reports coming in that the Chhatro Shibir, the student wing of the banned Jamaat-e-Islami, allegedly backed by the ISI, was inciting violence and turning student protests into a political movement. Sources say that Pakistan's army and ISI wanted to destabilize Sheikh Hasina's government and restore the opposition BNP to power. So far, it seems things are going exactly as per the script.
Okay, and keeping it with that, now let's understand how this unrest in Bangladesh could impact India. Which companies get impacted by this? Sharath is joining with us, who is here with all the breakdown and studied a lot of these companies. Sharath, what is the impact that one could be expecting on India now?
Well, currently we can expect operational impact coming in, and of course this is a short-term basis actually, and of course the textile and the FMCG pack, that is something which we will be watching out for. Now let's break it down into the impact analysis. The first one being the Bangladesh's impact on stocks, which are having higher percent of revenue coming in. We are having Pearl Global, almost 24% of the revenue comes from there. Amongst the larger players, Marico, almost 10 to 11% revenue comes, and also Imami, that's around 6%. So FMCG pack also, there are certain names where we can expect a negative impact because these are the sales. Also there are other companies where the revenue exposure is less than 5%. These are largely consumption names. Also we are having something from the agri space, which is Bayer Crop, GCPL, Britannia, Vikas Lifecare, Asian Paints, Pidilant, Jubilant Foodworks, to name a few. Also there are certain companies where there is a sources where sourcing happens, especially the sourcing happens in the textile industry. So what happens is any negative impact happens in the country itself, their sourcing or their factories, they start shutting down. First one being PDS, they are having factories in Bangladesh and roughly 55 to 60% of sourcing revenue comes. Also Pearl Global, if you look at it, that is roughly 50 to 60% of the plants are actually coming from Bangladesh plants itself, and yesterday itself they announced on the exchange filings that they are closing temporarily all their operations in Bangladesh. VIP Industries, it's a roughly 30 to 35% capacity, while Trent also sources from Hong Kong and Thailand and also has exposure in Bangladesh. Now also let's look at the global apparels exporters. Over here itself it's slightly positive reaction because the global companies will be looking at Bangladesh plus one supply chain. Now the names include such as Welspun India, Trident, Indacount and Himmat Singh said. Also another aspect of the textile industry is the yarn exporter. Interestingly, India exports roughly 25 to 30% of yarn exports to Bangladesh territory, and it might be sentimentally negative going ahead, especially for companies such as Vardhaman Textiles. Even Reliance has a unit which sells, and also spinning mills such as KPR mills as well as Nahar spinning mills.
Sharath, thank you so much for taking us through that. So those are some sectors and stocks to watch out for in today's trading session. But on that note, we'll slip into a very short break on this edition of Market Cafe. We'll be right back. Stay tuned.
Welcome back. You're watching Market Cafe on ET now, but let's move on. And in a recent event in Uttar Pradesh, Governor Anandiben Patel inaugurated the new campus of Sparsh Global Business School in Greater Noida in the field of management. The new campus has a good amount of green area with state-of-art facility, world-class infrastructure, along with experienced faculty from India and United States. The Sparsh campus is built to provide practical learning to the students. Sparsh Global Business School aims to deliver excellence in business education with its focus on conscious capitalism and responsible consumerism. Now, that's what we're watching out for. Let's listen in and what is happening there and on the recent update there.
We are very happy to inaugurate our new campus in Greater Noida for education in the field of management. We as a group have transformed and paved the way from corporate to education to hospitality. This particular campus is a green campus with state-of-the-art facility, having a residential program for students. The faculty is renowned faculty. The board of governors are experienced in the field of management, having experience of at least 10 to 15 years, 20 years. We also have on board faculty from universities in USA, from University of Copenhagen, Singapore, etc. This particular campus is a very unique campus. We are trying to inculcate practical learning which is being imparted through various laboratories. Now, these laboratories are not kind of a scientific laboratories. They are management laboratories which will inculcate practical knowledge for the students.
All right, with that, let's also slip into the news for the hearing impaired. Hi there, welcome back. Still watching Market Cafe with us on ET Now. Let's also understand the market moves we saw yesterday. ET Now's editor-in-chief Nikunj Dalmia along with Aisha decoded the fall in yesterday's stock markets. Let's go across and listen into that analysis.
Clearly, after the jobs data in the US, there have been recessionary concerns, although it seems that there is an emergency Fed meet, so who knows, maybe it's going to be an out-of-policy rate cut that we may have in the offing, and then, of course, what emerging markets do is anyone's guess from there. Traditionally, they typically move up whenever the Fed does ease off on rates, and considering this has been such a much awaited event, you never know at that. And also the yen carry trade unwinding, we've seen the kind of fall that the Japanese markets have had almost in a bear territory already. And then, of course, one can't negate really what's going on with regards to the geopolitical tensions all across West Asia, and as close as not geopolitical tensions but unrest definitely in our close neighborhood as well. So the texture of the fall today is very, very different than what a budget or an election day was.
It's global in nature, but globally, is it because of an event or is it because of the Humpty Dumpty leverage trades are reversing? I think it's the latter which is at play, because I don't think geopolitical tensions are new, or for that matter, US economic conditions are new. These are all, markets are reacting to yesterday's story, not tomorrow's fact. So that makes me hopeful that there's a technical sell-off.
Okay, but we also caught up with Jim Rogers yesterday, author and commodity expert, and he believes that this was overdue and he's waiting for the next sell-off before investing. Let's listen in.
The U.S. has not had a problem since 2008, 2009. That's the longest in American history. So America, and therefore the world, is long overdue for a problem. And I will say to you, I have a lot of cash. The reason I have a lot of cash is because I expect the next sell-off to be the worst in my lifetime, because the debt has gone up by so very, very much everywhere. Even India has debt now. So you should be worried. I am worried. I am waiting for this collapse to come because I know it's going to be very, very bad. Maybe it's here. I don't know. The world markets have had problems every few years for centuries. It's not unusual. India has been very strong, but everybody has been very strong except China. So we're overdue.
All right, let's step away from yesterday's fall and shift focus now to Sebi's recent guidelines. Market regulator Sebi has revised its guidelines for mutual funds by putting in place an institutional mechanism to identify and deter any market abuse, including front running. My colleague Ankur Mishra is here with more details.
After a few of the instances of market abuse, Sebi has come out with a circular for institutional mechanism to be implemented in mutual funds. Now, mutual funds needs to fix a policy, how this needs to be implemented, but what will this circular ensure? Now, this will ensure the accountability which will be there on MD, CEO as well as Chief Compliance Officer who needs to ensure that this is implemented in the entirety. Apart from that, AMCs shall also develop the systems and procedures to be generated, and how the alerts needs to be created as and when this kind of abuse happens. Now, as soon as these alerts are generated, the AMCs needs to review all the recorded conversations. This includes call, emails, or any kind of recordings which is available by mutual funds. Apart from that, AMCs shall also formulate policies, and that needs to be in written form for conducting examination and reviewing such kind of alerts. In fact, that communication needs also be sent to Sebi in a prescribed format which has been provided in this circular. And as far as whistleblower policy is concerned, that also needs to be ensured that it should be there in the written form by mutual funds. MFI has also got a big role in the implementation of this circular. Within 15 days, they need to decide how this will be implemented, and that flexibility has been given by Sebi to mutual funds.
Okay, thanks so much for that update there, Ankur. But on that note, we're going to step into a very short break. Don't go anywhere. We'll be back with more updates after the break. Welcome back. You're watching Market Cafe on ET now. The recovery that we had seen in the Nifty implied seems like that's coming off a bit. 24,291 is what the Nifty is at right now. But you're still holding on to gains of 7/10 or 8/10%, you could say. At one point of time, it was 9/10%. But let's move on and talk about some of the individual names that will be in focus in today's market. We have VMart Retail as well as Sirma SGS, which will be in focus. Now, VMart Retail reported a good set of numbers, 16% growth in terms of revenue. Profits this time is what the company reported versus a loss last year. Margins also have seen a marked improvement of more than 400 basis points. Now, what has led to this good growth for VMart Retail? One, strong retail operations. Their footfalls have increased very well. 36% increase in terms of the footfalls on a year-on-year basis. And this time, obviously, what's driving the strong revenue growth of 16% is a strong SSSG growth, both in VMart as well as Unlimited, as well as the footfalls, which also saw marked improvement. Revenue per square feet also, that's seen an improvement as well of 13% on a year-on-year basis. Core profitability, what we talk about of the company, that's the EBITDA as well as the EBITDA margins, that's seen an improvement. EBITDA margins at 13.4%, coming in also with a good improvement in terms of the core profitability. Other than that, same-store sales growth in terms of volumes, that's also seen an improvement of 10%. So it's surely a good set of numbers, keeping an eye out on VMart Retail. Sirma SGS, on the other hand, a weak start to FY25. What came in as a negative surprise is that we were talking about the healthcare segment seeing an improvement, in terms of revenue, and that leads to better margins. But that's something that's not worked out. Healthcare segment has started seeing a growth there in terms of increase in terms of the mix, but that improvement didn't come down to the margins, and that is why a downward revision came in for the margin guidance for the company. Other than that, the gross margins were at an all-time low of around 15%, while the mix shift towards the lower end of the margin side of the business, that's the consumer business, that started seeing an increase. And mainly the growth is driven by the consumer segment, which is a lower margin business. That's why the impact coming in on the margins, and seems like that's persisting as well. So revenue surely saw a growth of 92%, but that was mainly led by the consumer segment. Margins have seen a decline as well, 230 basis point contraction in terms of margins. So surely keeping an eye out on both these earnings today, Snehi.
Alright, so keeping an eye out on VMart as well as Sirma SGS, but let me now take it across to my colleague Ansh, who's standing by with the FNO snapshot yesterday, what the FIIs did, what the India VIX did, and what levels are key to watch out for on the index. Ansh, take it away.
Right, so let's start with what FIIs did in the previous session. In index future, we saw that they covered their long position by around 11,000 contracts. They added around 23,800 short contracts. So net to net, we are seeing addition of almost 35,000. With this, the total long position has dropped to around 60%, indicating they are getting a bit on a bearish zone. Also, with this, the total short has gone up by over 2 lakh contracts, which has happened for the first time in 28 session. Now, if you'll see India VIX, the India VIX is up by around 42%, and it has touched 4-week high high, and this is the biggest single session gain seen in 9 years, indicating high expectation of volatility in coming 1 month. Now, if you talk about Nifty, then Nifty has actually given a breakdown from that key 24,200 mark, indicating very bearish zone. If we want to get back on a positive sentiment, we need to come above that key level of 24,200. Also in index future, we are seeing open interest going down by around 3%, indicating long unwinding. So this is also a bit of a cautious signal. Whereas if we talk about on option front, then we are seeing that call writing is happening at that 24,200 strike. This is the same level which we discussed that we need to go above that. But option traders are expecting strong resistance around this level. If we talk about Nifty Bank, then Nifty Bank has actually slipped below 50 DMA, which is also a bit of a bearish sentiment. In index future, we are seeing open interest going up by around 13%, indicating strong short build-up, which is also a bearish sign. If we see on option front, then we are seeing call writing happening at that 50,500 level, indicating resistance around this level. Whereas on downside, we are seeing some put buying happening at that psychological level of 50,000, indicating option traders expecting Nifty Bank to stay below this level only. Lastly, let's have a quick view on few F&O stocks that are in focus. And we are seeing long build-up happening in Dabur, HUL and Tata Consumer Product, where short build-up for Motherson Sumi, LIC Housing Finance and Hindustan Copper. So keep an eye on these stocks.
Okay, surely keeping an eye out on all those stocks today on the back of F&O, but let's move on, and we do have some action happening in the world of IPO. We have two new IPOs that are opening for subscription today. We have First Cry as well as Unicommerce, which will be opening for IPO. Jinna is joining in with us to give us all those details. Jinna?
Well, yes, so first let's talk about First Cry, the company. If you talk about the business of First Cry, the company is India's largest multi-channel retailing platform for mothers, kids and babies products in terms of GMV. Moving on, if you talk about IPO detail, the dates will be opening from today till 8th of August, and the price band for this company will be 440 per piece to 465 per share. Moving on, if you talk about the total size of the IPO, it stands at 4,194 crores, out of which fresh issue stands at 1,666 crores, whereas the OFS stands about 2,528 crores. Moving on, if you talk about the objects of the issue, then the company will be using these funds for establishment of new stores and warehouses for a brand Baby Hug, for expenditure on lease payments and sales and marketing initiatives, among others. Moving on, if we talk about Unicom E Solutions, then the company is a software service platform that manages e-commerce operations for brands, sellers and logistics providers. If you talk about details, it will be opening from today till 8th of August, and the price band for this issue is about 102 to 104 per share. The IPO is in complete OFS, which stands with a total issue size of about 267.5 crores, and therefore all the proceeds which will be raised by IPO will be received by the selling of the shareholders.
All right, Jinay, thank you so much for taking us through that. Keep your eye out on both those IPOs today. But let me also now take it across to my colleague Gaurav, who's joining us to take us through all the stocks that brokerages are flagging off for us bright and early this morning. Gaurav, hi, good morning. Take it away.
Well, good morning. First, let's begin with Birlasoft, because Macquarie has now upgraded the rating to outperform, but cut the target price to 720 rupees per share. What they actually believe is that at this moment, it is an attractive point for investors to invest in this stock. They believe that in Q2, we will see some further improvement in the performance and deal wins. And apart from that, the BFSI segment and its improvements actually suggest that we may see some further uptick in earnings as well. And that is why they are being a little bullish when we talk about the outlook on the company, but overall, they have cut the target price to 720 rupees per share. Next, let's talk about Devyani, because Citi has now maintained buy rating and hiked the target price to 215 rupees per share. What they believe is that if we talk about Q1 results, those were actually better than what the street was expecting. They are expecting demand and consumer sentiment to improve from here on, and with consumer sentiment improving, QSR is going to be a space which is going to be a biggest beneficiary, and that is why they are being bullish on Devyani as well. Next, let's talk about Motherson Sumi Wiring, because Nomura has now maintained buy rating and hiked the target price to 85 rupees per share. What they believe is that in Q1 results, we saw EBITDA was a little below the street's expectation, but they are going to be key beneficiaries when we talk about premiumization and rising EV share. And apart from that, they also believe that operating leverage can actually help the company to maintain margins from Q2 onwards, and that is why they are being a little bullish on this company as well. Lastly, let's also watch out for Marico because we are getting a bullish view from brokerages. So Goldman Sachs has actually increased the target price to 715 rupees per share because what they believe is that in this quarter we have already seen volumes as well as revenues improving, and that is going to be a positive trend for the company. Although the Bangladesh concerns are going to remain, but overall they remain bullish on the company, and that is why they have hiked the target price to 715 rupees. Apart from that, Jefferies has also increased the target price for the company to 780 rupees because they also believe is that the growth trends are improving. Margins were actually sustained, which was again key positive for the company. Now Bangladesh concerns again remain according to Jefferies, but overall positive sentiment remains for the company, and that is why they are also being bullish with a target price of 780 rupees. So definitely watching out on all these counters on the back of a strong notes which are coming in from brokerages.
Okay, surely keeping an eye out on the stocks on the back of brokerages, but let's go across to Janay, who is here to tell us which are the stocks moving in trade, or which will move in trade today on the back of news flow. Janay?
Well, yes, so first up is Triveni Turbine, a good set of numbers. Revenue saw an uptick of about 23% coming in at 463 crores, whereas the net profit saw a jump of over 32% coming in at 80 crores versus 61 crores year-on-year basis. Moving in, BLS International, another good set of numbers. Revenue saw a jump of about 30% coming in at 493 crores this quarter versus 383 crores, whereas the net profit saw a jump of about 70% coming in at 121 crores versus 71 crores year-on-year basis. Also, company has approved a proposal for raising of funds via QIP for the amount about up to 2,000 crores. Moving on, BEML, weak set of results. Though the revenue was up about 10%, company reported a net loss of about 70 crores versus loss of 75 crores on year-on-year basis. Moving on, Equinox India will be focused as company has allotted NCDs worth 120 crores. Happiest Mind company has approved issuance of NCDs worth 250 crores. And lastly, watch out for Reflex Industries as the board has actually approved issuance of further securities for raising up to aggregate amount of about 1,000 crores.
Thank you so much for taking us through that list of stocks we need to be keeping a close eye out for in today's trading session. But well, yes, it's a wrap on this edition of Market Cafe. Implied open at showing a positive uptick of 183 points on the spot. At least let's brace ourselves for another day in trade. We need to watch out for and see how we open, and if we're able to sustain. See how exciting
it's going to be. Whichever way it moves, we'll keep an eye out on that.
But well, yes, it's a wrap on this edition of Market Cafe. Thank you so much for watching. The market takes all the action ahead.